Here today with Tim McLoughlin from Cofounders Capital. Tim, tell us a little bit about Cofounders and then why you're here today at Grepapalooza 3.
Sure, thanks, Chuck. So, Tim McLoughlin, I'm the managing partner at Cofounders Capital. We are currently investing out of our third fund, which is a $50 million venture capital fund focused on B2B software companies primarily in North Carolina, but across the Southeast. This is, like I said, our third fund. We've invested in about 40 companies over the last 9 years through our three funds that we've had. About $100 million overall, and put over half of that to work now, so we're pretty proud of that. Grepapalooza has been great. This is our third time here, third time speaking at the event. We've had portfolio companies here and on stage. We've had other co-investors that we work with here in the crowd. We can talk about what's going on in the current financing market. We can share deal flow. We can meet with new entrepreneurs. We can meet with vendors that are helping out portfolio companies as they grow and scale. Just a very good collaborative ecosystem, and I think that's one of the things that makes North Carolina special. I think that's what makes events like this special. Everyone's trying to help each other out. And if you come to one or two of these things, you start to see some of the same faces and friendly faces, and you make friends along the way, and that's good. And that's what I said in my on my panel today. I don't want to be a West Coast venture capitalist. I want to be a venture capitalist in North Carolina, and that's what we're doing. And it's because events like this and the place is special.
There we go. So what's the outlook for 2024? we got a second half coming up.
We do have a second half coming up. I still think that things have to loosen up, and they have to loosen up relatively quickly. The reason I say that, everyone wants to talk about interest rates and whether they're going to come down and it's going to change the funding dynamics. But these funds have a 5-year investment time period. Everything is on a time-based fund and return. And so if you think about a 10-year fund life cycle and you have 5 years to invest capital, well, you can't sit on the sidelines for 3 of the 5 years and not do any deals. And so at some point, people have to start writing checks. And you'll see a trickle down where more later stage folks start writing checks and opening up, and it'll trickle down to the earlier stages. And hopefully we'll see some more seed deals being done. And I can't tell you if that's going to happen in the next 3 months or the next 6 months or 9 months, but I know that can't go on for another 12 to 18.
Yeah, and back to what you're talking about, the difference between North Carolina startup and VCs and the rest of the country, community, is that one of the things that you emphasize?
Community, certainly. I think referential community, where if you got folks that are doing part-time work with companies, you're happy to refer them, inner portfolio, inner funds, but also sharing deal flow with the other VCs. It's not about one deal. So if you send somebody a deal and tell them they really should do it, it's not about that one deal. It's about building a relationship over 20 or 30 years with that firm. Folks are here and they're here to stay, and so you build that reputation, which means you got to be open and honest and collaborative. Nobody's got sharp elbows knocking people out of deals. You'd rather do it together, and that's important. That's kind of the kind of world and ecosystem I want to be in.